All right, so when we first start talking about liquidity, the assumption is you're a day trader, whether you're a scalper, whether you are a session trader, a intraday day trader where you're trying to do the entire daily range, or if you're just a short-term trader or you're looking to time the market for your longer-term swing trade or position trade. All of that is encapsulated in tonight's discussion. First session we're going to talk about is the PM session ranges. Okay, and this is always going to be referred to in terms of previous day. Okay, so previous day, we are going to be referring to the 1:30 p.m. to 4 p.m. time window, and this is always in New York local time. So PM session ranges, you're looking for the highest high and the lowest low between 1:30 p.m. and 4 p.m. Now, what do you do with it? If you are bullish, okay, and we are trading in close proximity to that range, as we see here, this example here, when we look at PM session ranges, it is always referred to in regular trading hours. Notice this down here in the lower right-hand corner. Let's make the chart a little bit bigger. So down here in the right-hand corner, that RTH, that's regular trading hours. But this toggle from RTH to electronic trading hours, ETH, okay, one or the other is going to be utilized. If we're going to be looking for PM session ranges, it's always going to be into previous day. The time window, the amount of time that you're looking inside of, what price range, what high are you looking at ICT, which low are you looking at ICT, regular trading hours, it cuts out all the overnight trading. The algorithm, once we start trading regular trading session hours, the next day, it's going to refer back to these specific times and what liquidity exists above and below it. So if we're bullish and we're trading near the opening in this little orange line here, that's going to be in every slide. That denotes the 9:30 opening bell. You know, when everybody's on CNBC and they clap their hands. That's when the opening bell occurs for the stock indices and stock market. Now, obviously, they're trading all night long, but that opening window starts that opening range for the next 30 minutes. Where will that usually run for? The high or low? If you're bullish and we take out the PM session low, where it's going to be sell side below that. Notice that this low here and this low here, that's encapsulated inside of the 1:30 to 4 o'clock New York local time. So below those relative equal lows, there's sell side liquidity. This logic, if we're bullish, we'd like to see sell side taken. Why? Because that means that smart money would accumulate those sell side liquidity and absorb it for their buy side. So they're going to treat that sell side as counterparty to their smart money buying. So they're accumulating in the Judas swing. The drop down here just goes into this area here where the liquidity is. It's only running down there to take sellers in the marketplace, and they're going to buy them. And then the market runs to buy side. Now, you could be a trader that simply takes this order here as a long, as a turtle suit. Now, admittedly, this takes a great deal of conviction, but your model could simply be wait for the sell side in the previous PM session range. If you're bullish, that's your buy. If you're going in, that means that you're expecting the weekly range to expand higher. The draw on liquidity higher on the weekly time frame. We covered all that stuff in the previous discussions. But going down into liquidity like this when we're bullish, we would reasonably expect it to run for what? The buy side. Where? What buy side? What high are you looking at, ICT? That one right there. Why? Because it's inside the range between 1:30 and 4 o'clock. How, pray tell, is that complicated? It's not complicated. Going further into the day, now we're considering a full 24-hour rotation. I'm going through the process of going through this very routine right here. I look at PM session range. If it's not a factor or it's not to be considered because we're not in close proximity to that range, because we could be significantly higher or lower around 9:30. So what am I looking for then? If I'm not close to PM session, previous PM session 1:30 p.m. to 4 p.m. range, at the time of 9:30 at the opening bell, and I'm watching that next 30 minutes, which is the opening range, what am I going to look for then next if it's not that? I'm looking at the London session raid. That means I'm going to be looking at the range between 2 o'clock in the morning and 5 o'clock in the morning, New York local time. All right, so London session raids. If we are not in close proximity to the previous PM session at 9:30, remember, this orange line here denotes the 9:30 opening bell of the stock market. So where are we at in terms of proximity? So we're starting the trading here. So where are we? Are we in close proximity to a PM session high or low? But we are in close proximity to what? London session buy side. We're digging into that. So all of this can be viewed pre-9:30 as a Judas swing. Now notice, am I showing you regular trading hours or electronic trading hours? Electronic trading hours. So that way you're going to be able to see the overnight trading. If you have it toggled to regular trading hours, you won't see this information, folks. It will be hidden from you. London session buy side liquidity. We're seeing that rate up into it here. And then, where's the low in that? Remember, 2 o'clock to 5 o'clock in the morning, New York local time. That's not ambiguous. What is the range? The highest high and the lowest low. Here and here. So if we rated the buy side and we did it on a run, that's a Judas, we anticipate that as a false run higher. And then we're going to see, does it shift lower? How can we use that information? Well, you can use the 2022 model. You can use a breaker, a bearish breaker. You can use the ICT optimal trade entry. In here, from this low to that high is a fair value gap. This is a shift in market structure below this low right there. That's your 2022 model or optimal trade entry. What would you be aiming for? London session, sell side liquidity. Do you have to sit through a retracement? Yes. But we'll cover that because that in itself is also a range that we utilize intraday. Notice what I'm taking you through. The whole routine of 24 hours. Where are we at open? Open is 9:30. We have to wait for 30 minutes because there's going to either be a run higher or lower, or it may consolidate, and then we'll have to wait for the 10 o'clock displacement, and then you can look for a silver bullet between 10 o'clock and 11, or you could use a run into the lunch macro. All right, opening range gaps. Okay, opening range gaps are a specific event that takes place when you're utilizing regular trading hours, where we stop trading for the regular trading hours and where we start trading again at 9:30's opening bell. That's what you're seeing, okay? That separation, that is my opening range gap. So whenever you hear me say an opening range gap, not to be confused with opening range, but when I say opening range, that is the first 30 minutes after the opening bell at 9:30. So specifically, it's 9:30 a.m. New York local time to 10 a.m. New York local time. This opening range gap is where we stop trading using regular trading hours and where we open up at 9:30. If there is a gap lower at 9:30, you will see this gap here. It's being shaded with this little orange box. It doesn't mean it wants to run up there immediately, okay? I want you to think about how where the market reaches for liquidity, where it reaches for that liquidity and where does it want to go to after it goes there. This low over here, right in here, that low is occurring in the morning session or the AM session between 9:30 and noon. So what would be residing below that? Sell stops. So we call that sell side liquidity. So we gap lower and then run into that liquidity right there using regular trading hours. Now, if you're using electronic trading hours, you may have a lower low overnight. And then, in other words, between these two price points here, where we closed at regular trading session and open at regular trading session, between those two price points, you have all of the 6 p.m. to 9:30 in the morning worth of trading that could have made a lower low here. I don't care. If I'm going to refer to the opening range gap and we get a gap lower like this, I'm filtering out all of the overnight price. That's it. What low would I be looking at? Well, on regular trading hours on this chart, that's a pretty obvious low, isn't it? Now, the opening range gap. If we run to a pool of liquidity like this here, wouldn't it make sense, since we're now into a discount and inside of liquidity, below old lows, we're in sell side now. We've already moved a lot from the previous session, here to here. What would be reasonable? Well, look at the economic calendar. Today we had the Fed Chair Powell jawboning at 10 o'clock in the morning. You wait. And you wait for what? The PM session. So you want to be what? Trading the afternoon. If you're going to trade at all, the probabilities are going to be high in your favor if you wait till the afternoon. That means 1:30 in the afternoon, New York local time, to 4 o'clock's close. Wouldn't you know it, there's a low here that forms at 1 o'clock. And then at 1:30 or so, it creates another low here. That's pretty interesting. What happens after that low forms? It runs right on up into that opening range gap. So all of this mess in here, it's going to be running around, going amok, just seeking liquidity, and it'll frustrate you. That's the reason why I tell you to focus on the sweet spots in the marketplace. So it runs up into the opening range gap after the New York lunch, after the morning session chop, and it runs to a logical level based on the information I'm showing you here. See, in the morning, a lot of folks that understand this gap exists were looking for any reason to run right up there then. No, they're not going to see it. Why? Because they don't understand time. The algorithm runs on time. It engineers liquidity in the morning session, and then it engineers it going into lunch, and then it runs on that liquidity. Why would they want to do that? We'll talk about that. New York lunch raid. Now, in the old days, and the open outcry and the pits would have a lunch hour where it was very, almost like a routine. Unless it was a big trending day, the lunch hour between noon and 1 p.m. New York local time would generally be a consolidation. Now, the way we could use that back then, and I'm going to show you how I use it now, but for historical purposes, I'm giving you a reference on how I become ICT. The lunch hour many times was a reversal, and whatever took place in the morning was completely reversed on, and then if it was a trending day, it would just keep on going, and it would repeat whatever the morning low was up to the lunch high, and then run into 3 o'clock, 4 o'clock, and that would be their full daily range. Other days, if it was bullish, it would go up and then consolidate during the 12 o'clock and 1 o'clock in the afternoon, and then do the same move in the afternoon between 2 o'clock and 4 o'clock that it did in the morning session, but it would do it in half the time. So it was a measured move, ABCD type of profile. And in other days, you would see just a morning move and then consolidate lunch and then stay consolidated the rest of the day. And the same thing if it was a bearish day, it would create the morning move, then consolidate in lunch and do nothing extra. And that was pretty much it. That was the profiles that existed back then. Now, you might be thinking, well, that's all well and good, Michael, but which one do you use? Well, which one would you expect based on the economic calendar, the draw on liquidity for the weekly range? What is it trying to do? Where's it reaching for? All those things have to be balanced. So a New York lunch raid between noon, New York local time, to 1:30 p.m. So a lunch run on liquidity, a raid, if you will, you have to define the range between 12 o'clock and 1:30. But you said it's an hour long. 1:30 starts the PM session. That's when the algorithm can start doing its macro. A macro is a short order of instructions that will create an event in price delivery. Your focus needs to be on the highest high and the lowest low. I'm showing you the highest high in 12 to 1 o'clock because there's nothing higher than the high here. The low formed here between 12 o'clock and 1:30, that's the lowest low here. So we see this low, it drops down there. If we're expecting price to be bullish and it's not done anything in the morning, Powell's talking, there's a afternoon event that's expected like FOMC, something to that effect, you avoid the morning session. Let everybody else chase everybody else's opinion. But the session high and the session low for lunch hour, the low here, we can see it running down, taking that, when we're expected to go higher. What do you think exists up here that's not being noted on the chart? We'll get back to that. The market starts its run at 1:30, completely random. Now, you're probably watching this video and you've never seen anything else by me or never listened to Twitter Spaces that I've done. And you don't know that I've said that time at 1:30, referring about the New York lunch and how there's an algorithm that controls price. And there's a macro that begins at 1:30 that sets the tone and pace for the 2 o'clock to 3 o'clock silver bullet, baby. The dots are starting to connect, aren't they? Starting to see a little bit more of the tapestry. We want to see when we're bullish, the market drop down and take out the New York lunch lows. even if it's going to reverse. You can trade that here. How can you trade that? Wait for a shift in market structure. Fair value gap. Don't trust the 5-minute chart. I've already shown you today using a 15-second chart, and we'll get to that too. If you're bearish, you can wait for a run up into the opening range gap, take out a lunch buy-side liquidity pool, and then watch and see how it trades back below the New York lunch high. If there's a displacement, what does that mean? See that low right here? Displacement. What does it leave? This candle's high and that candle's low. What is that? That's your 2022 model. Sell short. Aim for what, ICT? The New York lunch low. Well, it made this one here at 1 o'clock, but you can use this one while you're long or bullish. But in the afternoon session, you can see how that lunch hour plus 30 minutes, that 90-minute window, that low right here is where sell side resides. And in the PM session, it raids that liquidity. But ICT, look, man, there's some relative equal lows down there, and you teach relative equal lows, right? But before you get there, where's the next logical range to look for in terms of liquidity? That lunch hour or 90-minute period. Now, AM session ranges 9:30 in the morning to noon. So right away, we are considering this in the afternoon. So we can always refer to it in the same trading day. So we could be anticipating a market reversal profile, something to that effect. If we have an elongated market where, say, the New York session, morning session rather, of the current trading day is consolidation. And then we have a directional lunch hour, or during the lunch hour, it's consolidation as well. We can refer to, and if we're bearish, we look at the previous session's trading. Now, if you look at the previous session and you're using electronic trading, what specific low am I looking for? I'm looking at the 9:30 in the morning to noon. If I'm not going to look at the PM session range, remember I'm taking you to very specific pools of liquidity. I'm going to look past the PM session. Well, why would I do that? Because we're already trading below it over here. So would I refer to it for sell side? No, we're already below it. So if I'm bearish, what am I looking for? What low am I looking for? Which draw on liquidity am I looking for? In this regard, I'm using the AM session sell side liquidity. If I was bullish, it would be everything I just said here in reverse and opposite. I would be looking for the buy side. But if we're bearish, I'm looking for very specific pools of liquidity. If I showed this on regular trading hours, it would still get that low. Very important. Even though I'm showing you down here, the electronic trading hours, I'm doing this for the sake of showing you and understanding that whether your chart is on regular trading hours or electronic trading hours, and I'm looking at the previous daily range, or if I want to trade below yesterday's lows, what low am I looking at? The PM session low or the AM session low? Very, very specific. Always the same logic. What's changing is the profile that I'm operating in because the market's delivering a specific way, and I have to adapt to that. So you can see the previous AM session low over here, sell side liquidity. This dotted line here denotes we're looking at the 20th of June, 2023. So I can't use the afternoon session high and low because we've already, starting at 9:30, we're already below that. So what am I looking for, ICT? What am I supposed to be looking for? That low. It doesn't matter if it was a lower low, okay? Listen, if there was electronic trading hours showing and it had a lower low and it went below that low here, I would still, refer to the PM session range, as I mentioned a little bit ago in this presentation tonight. And before that one, I would go to this specific range here. It's a specific time. I don't care about overnight highs and lows. I'm looking at very specific regular trading hours. Regular trading hours is going to be referred to in the next trading session. They're either going to be respected or blown out. It's simple. That's not hard. All right, so let's blend some things here, okay? So as you can see, we have several things here in this chart, and this is today's trading, the 21st of June, 2023. and it's the E-mini S&P. The opening range, as I taught you here tonight, that was one of the factors I utilized today if you were following me on Twitter. I showed my PM session trade, which is what you're seeing here, using everything that I taught you tonight. Let's go through it, okay? This morning, we were watching Fed Chair Powell give his testimony at 10 o'clock. You have to wait until we get through lunch. If Fed Chair Powell is going to talk, and it's a 10 o'clock testimony or whatever, wait for lunch. Just wait for lunch. If you do that, you will get the cleanest setup for the day. The easy. What does that mean, cleanest setup? Like, what do you mean when you say that? Where everything just simply jumps off the chart and it makes itself very obvious. You want setups that are very obvious. That's clean. Okay? Powell, 10 o'clock, trash market. Okay? Just ignore it. And then what time does your shift start? At 1:30. That's when the macro will start running. At 1:30, the market creates a low here. Market trades down below the New York lunch sell side liquidity again. They can sweep it again. But notice it doesn't take that low here. I don't require it to. The logic is it's going down there once more, just in case. Rallies, comes back down into this down close candle, which is a bullish order block. I'm not teaching order blocks in this lecture. The market rallies. We have displacement again, fair value gaps and whatnot. What I saw was the market drop down below the initial New York lunch sell side liquidity. It's dropping down below here, and then I'm anticipating it to go up into that opening range gap. That's this shaded area up here. So what I do is I teach you where the market's going to go. What is your terminus? Terminus, while you're first learning, is the easiest low-hanging fruit objective. So if we're buying down here on the basis that sell-side liquidity pool for lunch has been swept here, and we see this returning but not respecting a run into and below that low. It's denying that, and it showed a willingness to repel back above this low. That's what I was looking through. All of this lows here, I'm looking past all that, going right to that low right there. Remember, this low here doesn't get taken out until the PM session. This low, I trusted it. But Michael, what happens if it went down? Then I would have got stopped out. If the trade's still valid, I'll go back in and re-enter. You've watched me do that. I've recorded myself doing that. So I'm buying under the premise that we're returning into that sell-side liquidity here. One more time. What is it doing here, though? If it's not taking out that low, what is it doing? It's trading below the rejection block, which is the lowest closing price in this swing. I don't need that low to be taken out. I don't want to see it taken out. So all the understanding of price action over here, I'm anticipating this accumulation and smart money jumping on board like I was to run to relative equal highs and more specifically inside that opening range from regular trading hours where we stopped trading and where we started trading. 42.22.5. That's this high in here. So I try to teach with that in mind, and I teach low-hanging fruit. Those terms are my way of saying, okay, if it's going to go higher, where is it going to go to logically? Well, if it's taken sell side out here, that means the sell stops have been rated there, and we swept down into the rejection block and preserved that low. In the afternoon, should see a run up into that gap. And for those that are wondering why should that happen and not take out the relative equal lows, is because we've already worked below that AM session low. Remember, before we traded into, well, not traded, but transitioned into this slide here, we traded into the previous session AM lows. So we were really in a deep discount. And that opening range gap has not been traded into from the open. It opened and ran away from it quickly. It's never came up to it until here. And it left what? Relative equal highs. What time of the day did it do it? Between 12 o'clock and 1:30. So that's your lunch buy-side liquidity. Buying, and every time the market gave me a buying opportunity, very specific PV arrays, on a 15-second chart, I was entering. This is a 1-minute chart, by the way, if you're looking at it here. It's 1 minute. Every one of these entries were based on a 15-second candle. But every time it reached above relative equal highs, I'm taking a partial profit. Up in here, another partial profit. Above this high here, partial profit. And above the high here, partial profit.